Good morning. Audio update, morning brief of the grain markets. It is June 30th. It is 8:54 a.m. Eastern Time. I'm Rich Possum for Critical Point. Today we do have the USDA acreage report coming out. Markets all excited about this. Lots of speculation that the acreage won't be as high as the polls suggest. And there's also a wide range within the polls. So there's also discussion that someone is going to be disappointed no matter what. Okay, so it would have to be practically a dead-on number, I guess, to get people to think otherwise. Okay, now, beyond this report, we do have the extreme heat in certain regions of the U.S. I'm not convinced it's really there in the main core corn belt other than, say, for Iowa, but really Iowa's more of a dry story. We are getting rains, and I saw a map that looks darn right bearish to me for coming rains. Yet there's also maps showing extreme heat working its way further east from Iowa east, so you can just see this mixed picture where we could still have some thinking of crop issues here. So it'll be interesting to see how quickly they dump the report and go on to refocusing weather. How important is that acreage number? Now, some other things I want to anticipate. First, let me warn you that when the report comes out, I will be in a webinar with hedge funds. I'll do my best to step out and see if I can make some comments of what's going on, but unfortunately, the two are coinciding time-wise. It's quite possible you won't hear anything from me till late today. As I look out for the bigger structure of these markets, the larger trends, I'm not so sure this report's really going to do all that much, but I could be wrong, okay? I still want to hold out for an idea of a bounce by early next month, meaning next week or later, and not this week. But you know, it is tricky. I can see how it's just not going to work. I'm very pleased how the model has operated from the long-term call made in August of last year to the first opportunity for a long-term top near the May USDA report. I made a call then. And basically the model's $3.74 a bushel ahead on that bull market. And it's 30-some cents a bushel ahead right now in a long-term bear market. And if I have to start over at a higher price and sell it again this summer, I will. But I really think this market has seen the high of the year. And I'd love to be bearish here and say, let's just pound this right into August, or at least the last week of July. And let's also consider being rather bearish right into harvest. Problem is, there's still time for some sizable knee-jerk reactions, and there is even time for a crop problem. Okay, now, what about the markets? I'm having a difficult time with the July contract in terms of the level 4 interweek swings. It's very fuzzy. It's clear that it's operated primarily by commercials and day traders. Everyone else, of course, has been out for a while. But the rotation to September and December also left it with rather fuzziness of how well these patterns are worked. Nevertheless, I've decided as of this morning, the primary focus is going to be on the December contract. And the December contract suggests that, yes, the market's coming down from a level 4 top. It wasn't necessarily timed that well by the model. Far more difficulty in the July. Actually, December was close to being correct. A level 4 bottom should occur today into the overnight market. In theory, it can last into the early day session tomorrow. But the general idea is probably tomorrow is going to be an up day for the market. So the key is, are we going to get a positive reversal today because they liked the report, or maybe they didn't like the report but shrugged it off and started trading off weather or something else and they bought anyways? Don't know. What I will tell you is it looks like to me my better intra-day indicators, and along with the daily stochastic for, say, the July at least, kind of tells me that there is a possibility here that, yes, it's going to bottom today. And therefore, maybe it's even going to be a bullish report, or it's just going to be a few minutes or an hour or something of aggressive selling that they didn't like to report, and then it bottoms. That's the best I can give you. There's really nothing here. I feel as though our indicators going right up to within 5 minutes of the report has worked very well for several months now. I think it's about time. That's probably not going to work. I shouldn't say it won't work, but it may be more neutral, that it just wasn't really any assistance. But as of right this moment, I feel as though there's actually a bias that the market will be up tomorrow, that it can bottom today. Unfortunately, I can't tell you, is it going to bottom minutes before the report, or is it going to bottom in a few minutes to an hour after the report, or by the close? So we'll take it one step at a time. What I will tell you in the December contract is there's a possibility the level 3 bottom was placed 2 days ago for December corn. It is a different structure. It is different timing. They are a different minded trader compared to July. The July has not appropriately put in a level 3 bottom. So maybe that means July could get hit the hardest if it were a bearish report. I don't know. But it does tell us that there's a disconnect inside the marketplace where traders are trading different contracts for different reasons, not clearly on the same page when you look at the different contracts. I will also say that if price trades above the current overnight high today, I think you have to consider a chance that it's turning up for that level 4 upswing to be up tomorrow. In addition, if it takes out yesterday's high at, what do I have here? 559 even. If it takes that out, it will generate a critical point price objective as high as 590 to 608. And the unique thing about that is if you draw that on a chart, I think you're going to find that somewhere from June 7th to about June 11th was a strange looking bearish island reversal. It didn't meet all the technical requirements. A lot of people probably missed it, threw it out. But you can see some of the characteristic was there. That could be an upside objective for bulls, but also a resistance level, meaning bears willing to sell it. The market could be that bullish going into that early July top. That does leave the door open for a positive report. And even if it's not a bullish report, it does mean we can still get some bullish trade. But what do we need? We need the market to take out yesterday's high to show us that we're on track for this next level 3 uptrend to put the market higher into next week. And then we got to be concerned that it's going to be the first opportunity for the more important level 2 top that's going to send the market right back down into late July into August. Okay? And then we'll get another blip probably end of August on into September, somewhere in there, and right on down to harvest. That's my scenario, okay? But in July, things could flip on us to become more bullish. Instead of topping early July, it tops late July by delaying to the next level 3 top. The market can change its mind, and likely it'll be weather that would do that. I don't think it's going to be relative to this report. Could be, but I think it's going to be more weather. Okay, so bottom line here is that I'm pleased it's actually down. I feel like I'm somewhat right, somewhat wrong last few days. But it feels like it is possible this thing is still going higher into next week with or without today's report. So hopefully that makes some sense, some help. I feel like soybeans and wheat are going to follow the same pattern, same characteristic. I think we can get some kind of lift into early next month, but I should say into next week or later. I realize we're going to start the month tomorrow. Obviously, we've got a long weekend that can interfere. We've got funds wrapping up the quarterly as well as monthly performances, and they may need to liquidate to raise cash to pay themselves. And obviously, the very next day, they're going to ask themselves, do they continue to follow through with that, or is it time to put positions on for their larger trend or in the opposite direction? And we can see this, of course, in all the financial markets as well as the commodities. So bottom line is, we just got to wait and see the report, see the numbers, see how they behave. And again, I may not be able to provide much of an update here for a while today. If I can, I will. But I would watch the overnight high. Obviously, downside, you have to target the recent lows if you think it's that bearish, and you just have to be concerned it can violate it. And then keep an eye on this weather flow, because it's fascinating to me how I'm seeing bearish-looking precip forecasts, yet I see bullish-looking temp forecasts. It's giving me a little bit of a problem here. And again, this difference between the July and, say, December contracts, really the commercial's running more. The July, the commercial takes care of the commercial. The commercial's not a very good forecaster of futures markets. Futures market is a better forecast of itself. Cash is not as important to the futures market as a lot of people think, but futures is more important to cash than a lot of people think. And I know this for a fact because I've worked both sides of this for 30-some years, and especially with some global exporters, some major users, processors, merchants of these grains. Okay, so I get that. I can understand what's going on in the July. Just a little puzzled why the December isn't quite cleared up yet. And it may be we just have to expire that July contract. Anyway, I'm going to focus more on the December, I think. And I'm going to watch what's going on. And I like the actual daily stochastic, 532 slow stochastic. It's actually an uptrend. It's acting bullish. And I'm just a little suspicious today's pullback is nothing more of a level 4 within a developing upswing into next week. So I would definitely keep an eye on yesterday's high. In the meantime, you just have to acknowledge the current swing, as of today, is down. No sign of bottom yet. But again, if you don't know how to deal with it, I guess you go on the bearish side until it takes out yesterday's high. Then you better consider there is a chance this crazy little model is going to be right, that somehow they're going to pop this screen going into next week. Past results are not necessarily indicative of future results. I have no fresh news. I realize I haven't been talking much about the Brazil frost, but you know what? It means little to nothing to me long term in these global markets. Short term, yes, it's helped to perk up the U.S. corn prices. Yes, to the Brazilian farmer, it's very important. They got issues there. But most of the damage was already done on the drought side of things. So I don't think this frost thing is that big a deal. They may make it look so on spreadsheets, but I really don't think it's changing my outlook whatsoever on a long-term basis here. Thank you.